Hi guys, I'm Stephen Green from the Property Investment Academy, and today I'm going to be talking how you can make some savings in tax and VAT. Now, first of all, let me tell you that I'm not a specialist in either tax or VAT, so it's always best to take professional advice from your accountant or a accountant. But these are some of the things what I use when I'm looking to buy property, when I'm doing my creative strategies of how I can actually save money by reducing my tax and VAT liability. So I'm going to talk into some of those today. So one of the ways you can save VAT is when you're converting a commercial to residential project, you can actually get something currently called reduced VAT, reduced rate VAT, fucking spit it out. And what that basically is it's 5%, it's reduced VAT. So if I'm to go get a big commercial warehouse and I'm going to convert that into individual units, let's say it's one great big square building, I'm going to convert that into 4 buildings, I can actually get reduced VAT. Now the reason for that is there's a massive deficit of properties in the UK. We're around about 300,000 houses short every year. The population's growing at a rate quicker than it ever has, and we can't build a rate quick enough to match the demands of the growing population. So the government are giving incentives. They actually want you to go out and make more residential properties, and if you do that, they're going to reward you and they'll give you 5% reduced VAT. Now what that means is, let's say for example your builder comes along and for ease of maths he says to you, right, for me to do the works on this building it's £100,000 plus VAT. So 100,000 plus your 20% VAT at standard rate is £120,000. Now if you're converting a commercial to residential project, that builder is allowed to charge you 5% VAT. So it's now 100,000 plus 5,000, meaning the total is 105,000, meaning there's a £15,000 saving by just understanding this one technique. So this is something that I'm often looking for when I'm converting buildings. Now, you can actually get a zero rated VAT, and that's if you're doing complete new builds. So if you were to go out now, find a bit of land, convert that into say 6 new build houses, you're allowed to get your builder to charge you at zero rated VAT. So that's 2 ways how you can save a really big chunk of money, substantial sort of amount of money. How else can we save on tax and VAT? Another way that you can do it with regards to stamp is there's a couple of ways with saving stamp. So recently the government changed the VAT amount, and if you've got a second home then you're now paying 3% and upwards on stamp. But there's a couple of ways around that. So if you're to buy a portfolio, multiple of 5 houses or more, then you can actually get a reduced rate of stamp, and it brings that down considerably. Again, you need to take advice on this, but when I'm looking to buy, I look to buy in bunches because that can give me a great saving on stamp. Another way that you can get savings on stamp is by a method called assisted sales. So this is something where a property might be on the market for say £60,000. It needs a lot of work doing to it. You go to the person who's selling that property, the vendor, and you actually say to them, I can give you full market value. Now, they might have had loads of silly offers because the building requires a lot of work, and you can go and say, I'll give you full market value. But what I actually want to do is I'm going to do the works on the property, and then the extra profit that comes out of that building, we'll split it. And you might do that in a sort of a 75% in your favour and 25% in their favour. So you can give them full market value for that property, and you get to keep the profit that's made on the uplift of the property by doing the works on it. And this is a legal document. It's all done through a solicitor, and it's another creative strategy that I use. But by doing that, you don't actually buy the property, meaning you don't actually have the stamp, so you don't have to purchase it, renovate the property and flip it. You can actually do it and avoid the stamp. So that is another way how you can save on stamp. Another way that I use, and this is something that you can do if you've got a portfolio. So if you're buying a portfolio off somebody else, where you've got the 3% and upwards of stamp, if you actually buy that company, so you buy the shares in the company, then you can actually get that down to 0.5% rate. So it's a massive saving, because on commercial, that rate could be around about 4%. So you can make a great saving by buying the entire company. Now, again, you need to get professional advice on this, because you might be buying a company that's got a lot of liabilities and a lot of problems with it. So again, it's something you need to check out. You need to do your due diligence, but it's another way that you can save on stamp. Another way which I see this a lot with entrepreneurs who are selling businesses. Let's say they bought a business and it was £50,000, and 10 years later they're selling that business for £150,000. So there's £100,000 gain. Now, a lot of I've seen this with some accountants as well that actually miss this trick, and the uplift in that £100,000 gain, you will be liable for capital gains tax. But if you're actually selling that business on, you're liquidating that business, you're entitled to entrepreneurs tax reliefs. And entrepreneurs tax relief is actually at just 10%. I think at the moment capital gains tax is around about 28%. So again, there's a huge saving by you using entrepreneurs tax relief. Now, currently at the moment, we are all entitled to £10 million worth of entrepreneurs tax relief. So you right now, and me, anybody else who's watching this video, you have your own personal allowance, and very few people are aware of this allowance, and they don't use it. And I see people selling businesses, and they are literally throwing tens of thousands of pounds down the drain by not being tax efficient. A lot of people are saying that now is a really bad time to be in property. The government have brought out this new regulation, this new tax, which is Section 24, and it basically means that you pay tax on the whole of your gain. So you can no longer offset your mortgage against your gain in rental income. But again, there's a way around that. If you set up your portfolio where then properties are inside a limited company, you're now exempt from Section 24. Now again, you need to take advice from this. Sometimes this only benefits you if you've got a substantial portfolio, but if you're serious about building a good sized property portfolio, then you should be looking to put your properties into a limited company. So again, take advice on that. So there's just a number of ways how you can save tax, VAT, stamp, by just being creative, by understanding these things, because quite often your solicitor, that they might not know about this, they're not going to tell you about it unless you ask. Some accountants don't even know these things, and I've seen people where their accountants have never told them about things like Section 24, and this has been out now this was announced nearly 4 years ago, Section 24. So make sure you have the right people around you who can advise you on this type of stuff. So if you've got benefit from this today, please like it, please share it, tag somebody that you know might benefit from this video. Absolutely make sure that you subscribe to this channel, and you can get more free content like this. If you look in the description, you'll be able to see links to our free training where we talk into this stuff in depth, where I'm able to help my mentees to make savings, to grow the portfolio. And there's also a link to my book in there as well, a free download to my book. and I hope to see you on some future training. Thank you, Stephen.